Sure, can you hear me? There you go. I bet. Make sure you throw this up on your story here in like 2 minutes. I think I had text blast just go out.
That link you sent me, right?
Yeah, yeah. The make sure you just copy it from iMessage.
All right, yep.
Make sure to join Jay Dunn.
All right, I'm going to start it.
All right, bet. Let's rip.
Hello, hello, hello. What's going on, everybody? What's up? What's up? What's up? How we doing? What is going on, my money making future millionaire DOD friends, baby? I'm going to enable this chat so y'all can type. Good afternoon, good evening. Hello, everybody. How is it going? What's up, everybody? Welcome back to day two. We're looking a little healthier today, right? I feel like my voice is up a little bit, my skin's a little brighter, and it's just in time for y'all to learn the life-changing strategy that I'm going to be teaching you and helping you implement. Tonight, baby, we're signing, we're going. Y'all know what time it is, baby. I'm not dying. I was literally dying of the flu yesterday. If y'all saw my personal IG story, you saw I was literally spitting up blood. It was horrible. It was not a good situation. I don't know what was going on. I was like coughing and stuff, and it was just not a good situation. But we're back. We're live. We're going to give people a few minutes to go ahead and join up. I don't want anyone to miss any of this session. And in the meantime, I want to take this time to ask, how was everyone's trading day? How did you guys do with what we went over yesterday? Did you guys follow your plan? Did you guys all do what we talked about? You guys doing? You guys set the tone for 2026? You guys make some money? I don't care if you made money, and I don't mean that in a disrespectful way, but I care about you following your plan. That's what really matters to me personally. 5K lucky. Well, that's not a win, my friend. Even if you made 5K, that's great. That's a lot of money, but you're going to give it back if it's off luck, if it's off bad system. That's what you have to remember. And that's the uncomfortable truth is not all money you make is good money. You must remember that. Passed my first Apex eval, missed first session. Okay. All right, passed the eval. We'll take that. We're going to start this in just like 2 or 3 minutes, guys. I want to give everyone a chance to really pile in here. I don't want anyone missing any of today's lesson. It's very, 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 very valuable. What's up, Jonathan? What's up, Daniel? Your system works. Thanks for 5K. Hope you're feeling better. I'm feeling so much better, bro. I'm feeling literally 100 times better. Like literally 100 times better. Maybe 200 times better. I feel more energetic. My voice is here. I'm not coughing. I'm just feeling ready to go. I love teaching. I love helping you guys learn. Trading is something that changed my life. I'm very passionate about teaching, about helping others learn the same skill that helped me. And so this is fun for me, right? This is a good time for me. Join the free live training. All right. We got people piling in what is it? 3 minutes we're starting, guys. In 3 minutes. So grab your coffee, grab your water, grab your notebook, whatever you need to take notes today to get the most out of this. Go grab it because we're going all in today, baby. I'm not stopping. We'll go 4 hours if we need to. We'll go 4 hours if we need to. 5 hours? What time is it now? It's 5 p.m. here in Colorado. So, I typically go to bed about better on 10. I'm trying to be sleeping by 10. So we can go to like 9:45, right? 4 hours, 45 minutes. We got grandpa in the house. You guys should have gotten the recording from last night. I know some of you guys didn't. So if you didn't, we'll work on a solution to get both of the classes to you after we finish tonight. I will stay up until 1 in the morning if I have to. There will be no surrender of how long I'm willing to stay up for you guys. And that's a promise. That is a promise. Let's go here. All right. Bada bing, bada boom. You got it, Carlos. So I didn't go to the doctor. I just honestly drank a lot of water. I sat in my infrared sauna. I ate healthy food, took care of myself. And honestly, I never get sick. Like, I literally never get sick with how healthy I live, with how healthy I eat, and just how I live my daily life. Doesn't happen, but guess it happens to everyone at some point, right? And can we all take a second to appreciate the mug we broke out with coffee? Y'all know what happens when we break out the coffee late at night. If you've ever had a webinar where I'm drinking coffee, especially out of a Discipline Over Dopamine mug, are you kidding me? DOD on the mug? Oh, man. You know it's about to be crazy tonight. You know when the DOD mug is out, it's going down. You guys know it's going down. All right, it's time for us to get started, baby. So I'm going to go ahead and I'm going to share my screen. All right. And let's get this party started. Welcome back, everybody, to night 2 of Discipline Over Dopamine, the year where you choose DOD and you find your path to profitability. I'm very excited you guys all chose to come back tonight. I know some of you are coming in. Some of you guys are watching this on recording. Whatever it may be, I'm happy to have you here. And I promise this will be the best hour and a half, maybe even 2 hours. You guys know I'm passionate about teaching you. I don't want anyone walking away from this not feeling like you're confident enough to teach the exact strategy I'm going to give you in tomorrow's trading day. That's my goal for tonight. I have some other goals as well, but ultimately, I want you guys confident in your ability to execute. And if we can make that happen, I've done my job as your mentor. Now, last night we covered the profitable trading mindset. What does it take to win the mental game of trading? What does it take to master DOD from a systematic standpoint of psychology? We covered the 3 pillars that changed everything for me. We changed how you're going to accept losses, how you're going to become the best loser in 2026. We covered how you're going to stay patient in your trading. You're not going to force trades. You're going to get rid of the daily goal. You're not going to succumb to the same practices that have lost you money over and over and over. And we went over how you're going to stay consistent with your journaling, with your system, and with your progress and how you scale your trading in 2026. Now, as we move forward, tonight's mission, we're getting on the charts. A majority of tonight will be spent on the charts, going over how you're going to visualize risk, how you're going to trade, and what's actually going to make you money on a day-to-day basis. This is the strategy session that you've all been waiting for. And it's here in real time right now. It's going down. Now, why should you listen to me? All right, there's a million different gurus online. There's gurus over here. There's gurus over there. I've shown you guys for the last 5 years I've been on social media, 9 years as a trader, some very big gains. But I don't tell you guys it's get rich quick. You'll never hear me say trading is get rich quick. Join my course. You're all going to quit your jobs in 6 months. It's actually quite the opposite. I want you guys to take a slow, steady approach to trading, and that's how you get big results like these. That's how you get the big days. That's how you get the consistent days. And that's what I want you guys to focus on by the end of tonight, is having a consistent strategy that pays you consistently on a day-to-day, week-to-day, month-to-day basis. Now, it's not just me. This was today in Team Bull, and I want to take a special moment to congratulate one of my Master Mentor students, a Team Bull family member, on his $40,000 payout. Aaron joined me on July 21st of this year. What he did next was he started asking questions. How do you recommend scaling a funded account? What account size do you use? Nice job. That's awesome. He saw my 50K payout. He starts having small days. 583 is not small, but in accordance to 50K, it is small. 500 is not small. Please don't take it like that. He starts having more consistent days. Team Bull rocks, up $2,500 on my Apex fundeds. He locks in $4,800 in profit, and today He says, been learning a lot since I've been a part of Team Bull, discipline over dopamine. He gets a $40,000 payout approved. Now tell me that's not cool for our boy Aaron. And it just goes to show that small, consistent base hits with the right strategy, with the right system, with the right focus can pay off for anybody. Aaron is no different than you. I'm no different than you. It's all about having the right mindset, the right strategy, and knowing how to keep your losses small and having your wins stay big. So going forward, I want you to realize that by being here and by listening to what I'm about to teach you, this could be you. It's not going to be easy. It's sure as hell not going to be easy. But I want you to instill the mindset in yourself that why not you? It's very easy to think it could never be me. It can be you. Now, before we dive in, let me ask you something. How many of you made a promise to yourself last night? Maybe you said, I'm going to journal every trade in January, or I'm going to follow the 2% rule, or I'm going to finally stop over trading. How many of you guys made a promise to yourself of some, in some regards, to either of these things? Lots of you, lots of yeses, lots of yeps coming in. And here's the real question I want to ask is, are you actually going to do it? Or is January 2nd going to roll around and you're back to the same patterns? I want you guys all to commit that you're actually going to do it this time. Because 80% plus, I'd argue it's around 90% of New Year's resolutions fail. A majority of New Year's resolutions fail. That goes for diet-based ones, fitness, trading, business, whatever it may be. So I need you guys to commit that you are actually going to do this. Here's what I know about most of you. You don't have a strategy problem. You have an execution problem. You have problems and you struggle with consistently executing on a day-to-day basis. You might make money 1, 2, 3 days in a row, but you lose all of it on day 4. I can give you my exact setups tonight, and I will. Trust that I will. But if you don't have the accountability, the structure, the daily guidance to actually follow it, you're going to be sitting here next December 30th watching another webinar making the same promises. I don't want that for you. I know you don't want that either. So here's what I'm going to do for you tonight. I'm going to show you the DoD strategy, the exact approach that I use of 1 to 2 setups per day to be done by 11:30 a.m. maximum Eastern time and consistently pull out profits. I'm going to break everything I do on a day-to-day basis down for you in the simplest and the stupidest, simplest way I possibly can. I'm going to make it so simple that if you had to go teach your 2nd grader at home, you could do it. That's my goal for you. Maybe we get to 5th grade level. I'm going to make this so simple for you that you will understand it and be able to apply it as soon as tomorrow. Price action, volume, no fancy indicators, no ICT wizardry, just clean, boring, profitable trading. Can you guys get down with that? Are you guys okay with KISS? Keep it simple, stupid? Are we all on the same page? Okay. But I'm also going to show you something else. I got something else for you too. I'm going to show you how to make 2026 the year you actually become a profitable trader. Not just learn about trading. You've all watched a million boring trading videos. Not cutting it anymore. I want you to actually make money from this. I want you to take money from your trading account and spend it on your family. I want you to take money from your trading account and pay your rent with it. I want you to take money from your trading account and go to a nice dinner with it. Whatever it may be for you, whatever makes you happy, that's what I want 2026 to be. Not watching another boring trading video and struggling with trading and never getting paid from it and repeating the hamster wheel over and over and over. Done with that. That's not happening anymore. Because there's a difference. And that difference is what separates the 5% from the 95%. Fair enough? Can we all get down with that? Are we all on the same page? All right. Let's head on over then to the charts. Now, what I first want to cover with you guys before we get into any of this are a few foundations for how I trade every day. There's a few systematic things that you guys need to know. Why won't it? Okay, here we go. No. All right, here we go. Now, there's a few systematic things that you guys need to know when it comes to building a profitable trading strategy. The first pillar of how I trade boils down to identifying key levels. Now, what is a key level? A key level for me is any sort of level that is going to have some sort of elevated reaction when we get there. It's a level of importance to where we touch, we want to pay attention. Now, each candlestick tells its own story, but from my 9 years of experience, I've found that candlesticks that interact with key levels tell a much more intricate story. They tell us a lot more and give us a lot more high probability of where price is about to head, and that's what we care about. We care about getting ahead of where price is about to head. We don't want to predict the future. We don't want to guess. We want to have a statistic high probability of having a good chance to win and manage our risk in case we don't, which a lot of the times we won't. So we're going to identify key levels. Number 2 is we are always going to visualize our risk. And we're going to break each of these down step by step. And when I talk about visualizing a risk, what that means is I don't want you guys, after today, I never want you guys having any sort of trade where you see market moving like this, okay? You buy in here and you don't know exactly where your stop's going to be and what your risk is. How many of you guys in the past year of trading, or maybe in the past week, or maybe in the past few hours, hopefully not, but likely so, have had a trade where you bought in and you had no idea what the hell you were going to lose? Where you buy in a contract or two and you have absolutely no clue how much you're going to lose if the trade doesn't go your way. Has that happened to anyone here? Well, today, whether you're a beginner, intermediate, or advanced trader, my goal with you in teaching you the DOD and the VPA, which means volume price analysis, we'll get to that in a moment, system, is to help you visualize your risk and never let you have a trade where you don't know how much you're going to lose, where you don't know even a ballpark of how much you're going to lose. So that's going to be step 2 in our systematic approach to making consistent money with this strategy. Number 3 is VPA times DOD. Now you may be asking, what is VPA? VPA stands for volume price analysis. It's the baseline of how I trade. And all that means, in the most simple way possible explained, is how I read volume in accordance to price. Okay, I'm going to keep this very simple. All VPA means is I'm watching how candlesticks move, primarily on the 5-minute chart, and how volume is corresponding with those candlesticks. I have a lot of examples for you today, so if you're not quite sure what that means yet or you don't understand, please don't get ahead of yourself. You'll understand in the next hour. So I take identifying key levels, visualizing my risk, and VPA times a mixture of DOD, part of what we went over yesterday, and that's what I look for as a trader. Now, when I first start my day, I always want to first look at my macro timeframes. That is the first thing I look at every single morning. I primarily trade off my 5-minute chart. We'll get to that in a moment. But I'm always going to start out looking at my 4-hour chart and my 1-hour chart. Now, as a trader, tell me why I would always want to be looking and have an idea of what my 4-hour and 1-hour charts look like. Even though I'm an intraday trader, I want to know if there's any key specific levels that I may be coming to and what macro trend looks like. I don't go into every day with a daily bias. I don't agree with daily biases. I think that it's important to look at pre-market action. We're going to cover that later too. But I want to understand if we have any sort of key levels in the 4-hour, any liquidity sweeps, any key supports or resistances, or anything that I might not want to miss if I'm looking for an intraday setup that could interfere with that. Now, as we look towards all-time highs, it gets a little tougher because we don't have a lot of data to base our setups on. But looking at this chart alone, and what I'm going to teach you guys, I see comments in the chat talking about, and gaps as well. Yep. I see comments in the chat asking about options. Everything I'm teaching you is applicable to futures, to options, and to individual stocks. That's the beauty of how I trade. When you trade price action, right? When you trade VPA, you have a skill for life. You're not worrying about indicators. You're not worrying about analyzing 100 different things like you see a lot with ICT. You're strictly reading what price is giving you on a day-to-day basis. And that doesn't matter. Say if AI comes in 5 years and takes over trading. Okay. That's a lot of people's worries is, well, Jadon, what's AI going to do in 5 to 10 years? Well, as long as there's supply and demand in any market, sure, AI could make markets much more efficient, but with what we're teaching here with key levels and price action, the most simple strategy I can give you, there will always be opportunity for you guys to make money. And that's what I care about, is giving you guys opportunity to make consistent money to take care of your families. Keeping it simple, stupid. So let's look here. When I'm looking at the 4-hour chart, I'm not looking at, let me get something clear too for the beginners. I don't trade chart patterns. You're never going to see me sitting here. Let's cover this first. Saying, all right, well, we have shoulder here, and we have head here, we have shoulder here. Why don't I trade chart patterns? Let's make this a topic right now. Why am I never looking for chart patterns? Because they're not consistent. How many of you have sat there drawing like a toddler saying, okay, well, I could see this being a double bottom here and here, but maybe the double bottom was here and here. Well, actually, I think the head and shoulders, this was the head and this was shoulder. So let's go back. Maybe like he broke his collarbone back in the day. So like this is the second shoulder. It's a little slugged. Like you find yourself making all these different scenarios and drawing pictures for a setup that actually doesn't really exist, right? So that's what I don't want you guys sitting there drawing and trying to guess if a chart pattern is a chart pattern. That is not going to get you to where you want to be as a trader. You don't find multi-million-dollar traders that have found their way to success day trading drawing out head and shoulders, drawing out pie triangles. It just doesn't work like that. We care about where supply is, where demand is, and where price is heading, none of which, unless it's extremely apparent, is going to have anything to do with chart patterns. So now that we have that out of the way, let's talk about what we do look at and what we do care about. We care about levels that have been touched multiple times, right? So when we look at this 4-hour chart specifically here, I'm going to look at this and I'm going to say, all right, well, we have a relative swing low. And what a swing low means, whenever I talk about swing lows or swing highs, swing low is when we set a low and begin an uptrend. A swing high is when we set a high and begin a downtrend. It's when price swings high and then dips lower. Swing low means we swing low and dip higher, right? And you could arguably go back and say this was the swing low of here. This is a higher low. And so from the larger time frames, we are moving up. I then want to look at this and I want to say, what levels do we have price touch multiple times but not break through? We can see this very clearly, right? We take out our horizontal line tool here. We see we touch multiple times here around this 25,875. We see that we touch here at this, there we go. At this swing point, we have an aggressive push through with a test that we never retest. We're going to go ahead and mark this out. We had multiple touches here, resistance, turn support, back to resistance, back to support, so that when we come down here and when we touch this, right, I'm not going to watch for this 25,500 area and say, you know what, the second we touch this, I'm going to just buy and hope we go up. But what having a key level marked like this tells me is that when we get down to this level, intraday, I'm going to be watching my intraday time frames very closely as we get to this level right here for confirmation to either buy or sell. Now tell me, when we find a key level like this, what else tells me that this might be an area of interest for us as we get closer to this level? What else about this? We're gonna put this category as things you want to take note of. Key points, we'll call it. It's a whole psych level. Now, anytime you have a whole psych number, at a key level, when analyzing higher time frames, there's a higher probability you see a reaction there. So we notice we mark this out, and it happens to be 25,500, whole cycle number. There's a higher probability that overall market participants will see this whole cycle number and will see more price action hit when we get there. So we have that marked out. We know our key levels in the near future, and you can go down and you can mark levels down here and down here. I don't like having my chart marked up. The more markings I have on it, it just confuses me, it overwhelms me, and I like to keep my trading very simple. You're not going to see me trading with a million different lines on my chart. So we know that this 25,500 is going to be a key level if we continue this downtrend. So then we go to our 1 hour chart. This is something I do every single morning on the few stocks that I watch, or futures, you could say. I watch SPY and QQQ, which are ETFs. I watch NASDAQ and ES. Then I'll watch on occasion gold and Tesla. So we know, we can see this very clearly here. We had this touch up here on the hourly. We had an aggressive push down. We broke down to this on the hourly chart, retested back up, and we haven't had the retest back down yet to see if our buyers are going to step in or if we're going to end up breaking this and making this support turn back to resistance. So now that we know this, we can verify this as a key level. We verify it's an area of interest for potential buyers or sellers. That's when we move down to our 5-minute time frame. All right? We don't sit there. We don't take every trade based on the higher time frame charts, not as day traders. But we care about that as we get closer. Now let's take a step back here and let's talk about what it means for us on a day-to-day basis to mark out our key levels. Every single morning, I go to the market and I'm going to mark out my pre-market low and pre-market high. So in today's instance, I like to mark this out around 2 a.m. Eastern time, right? Or 2 a.m. Eastern time. So we can see our pre-market low is right here. I'm going to mark that blue, okay? Our pre-market high, as we'll see here, is right here. We're going to mark that blue as well. I mark these levels out every single morning. Every single day, I mark out what is my pre-market high and what is my pre-market low. Because these are very, very often key levels where we see strong reactions at. Now, the next set of key levels that I'm going to mark out. Yeah, I start from 0, 0 on the chart to mark these out. Yes. Now, the next levels that I'm going to mark out is our 15-minute high and our 15-minute low. Now, when I mark these levels out, I mark out the high of the first 15 minutes of range. So these are 5-minute candlesticks, okay? I'm going to mark out the high of this first 5-minute candlestick, which I'm going to paint green, not to get it confused with my pre-market levels. And then I'm going to mark out the low of these first 15 minutes down here. And that's what creates our first 15-minute range. Once we have this set up, we have our 15-minute range set. We have our pre-market low and pre-market high range set. This is going to give me a basis of where I believe price will head for the day. Oftentimes, you'll see, and we'll go over many examples of this, if we build a base above both of these lines, above pre-market high and above 15-minute high, oftentimes you'll see us come up, retest, and move up. If we build a base below these names, oftentimes you'll see us come down, retest, and move down. This is a scenario today where on this particular day, we retest back up. We'll go over why this didn't work out in a moment. This is a scenario where we came, retested, and we ended up chopping the rest of the day, not getting any sort of movement. Now, you might be looking at this and thinking, well, Jadon, there's no trade to take in here because we didn't trend above or below these levels. And that's not necessarily true. If you trade with me every day, this was a trade that we caught in here. What part of this have I not explained to you that could potentially be a game changer for you going forward? There's one more key part of this. And that key part of this is called our Fibonacci retracement tool, the 50% retracement and the 61.8. Now, whenever I see an aggressive impulse candle like this, I always want to mark out from the high on a downtrend. I'm going to make this very simple. On a downtrend, when price is moving down, you're going to take your Fibonacci retracement tool, which you see up here. It looks like this on any platform you're on. And we're going to go from the high of the candle and mark down to the low. Now, if you grab your Fibonacci retracement tool and it doesn't look like this, it's because you must go into the settings, and I turn off every single setting except for the 50% and the 61.8. I personally haven't found any sort of high probability setups using any of the other retracements. I care about the 50% and I care about the 61.8, and that is it. All of the rest is just noise, if you ask me. Someone else may disagree. After 9 years, almost 10 years of trading, I think the rest is noise. So I only keep these two retracements on. I say 61.8. It's easier to say instead of 0.618. So I keep these two on. Now, from high to low, this marks our 50% retracement of the range and our 61.8. Now, oftentimes, when you see us move up, or when you see us move back up into this range on a strong trend-setting candle, you're going to see us come up, retest this area, and move back down. Now, there's a very, 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 very critical part of this that you cannot mess up, because you may be saying, well, J-Dunn, that looks good. You know, I see what you're saying. You draw the Fibonacci retracement tool down. You want the lower high retest because you want to catch the trend. You don't want to be chasing moves to the downside. You don't want to be bottom ticking. You don't want to be top ticking. What I want you guys to do after this webinar is I want you guys to be trend traders. You don't got to have the whole pie. You go to Thanksgiving, you don't eat the whole pie. You need a slice, 2 slices. That's what catching the trend is. Some of y'all might need 3 slices, probably only 2, but you might take 3. Anywho, you guys got to focus on catching a part of the pie. That's what catching the trend gets you. And so we see this setup right here where we move up. What do we notice is happening as we move up into this move right here? Tell me what's happening between price moving up and our volume. We notice that price is moving up after a strong downtrend candle, and volume is moving to the downside. Now, for anyone who's learned from me before, can you tell me what is this called when we have large candlesticks moving in a direction but lowering volume? What is that called when candlesticks are not matching with what volume is telling us? It's called an anomaly. So whenever you guys throughout the next hour or 2 hours, whatever we end up spending together, hear me talk about an anomaly, that's what it means. It means that these candlesticks are getting larger, right? Price is moving up. This candlestick is larger than this candlestick by measure. So riddle me this, why is this candlestick larger but has less volume? It means that manipulation is happening, right? Price is moving up, but sellers are setting up for a move. This move isn't supported by aggressive buyers. Now, something else for the beginners here is you hear a lot of people talk about how there's more buyers than sellers. Have you guys ever heard someone say that in a video, how you have more buyers or more sellers? At some point, I'm sure you did, which is impossible because for every buyer, there is a seller. When someone buys, they can't buy it from the boogeyman. Every seller needs a buyer. What we care about is aggressive buyers and aggressive sellers. So when I can look at volume and tell that our buyers are not aggressive here, that tells me there's a very high probability that we're going to see a rejection in this area. That's where VPA becomes really powerful for us because we can see in real time before it happens that our buyers are less aggressive. So it increases our probability that we see a reversal here. We catch this lower high and we move down. So let's talk about this next candle we see. We see buying pressures decreasing. We know that we're coming in to a lower high area that's supported by our fibs. And then we see a reversal candlestick. So this is the point where you start looking and you say, we rejected the 61.8. We failed to go higher. So let's look for an entry in this area. Now, how do you define where your entry is? Does anyone here ever struggle with trying to find the perfect entry? Do any of you think that you can never find an entry because you want it to be picture perfect and you never get it because you don't know where to enter, and if it's not perfect, you're going to lose your butt? Well, I'm here to do my absolute best to help change that for you today. When it comes to catching trend moves, you're not going to catch the perfect entry. What you can do, though, and this is where I like to visualize risk. This is where that second category I told you about, visualizing risk, is going to come into play. When you visualize your risk, it means you can see where your trade is no longer valid on the screen. That has been a game changer for me as a trader these past few years. So when I see this reversal candle here, and I see the high of this wick is at 759. Let's go ahead and let's mark that out together. 759 here, right? We let this candle form. We see a clear doji reversal candle. We know that it's a very high probability that price is going to reject in this area after we see volume dying down and a reversal doji here showing sellers are starting to step in. Well, if you see price up here is 759, I typically like, if I'm trading the NASDAQ or MNQ, if I'm trading anything, any sort of NASDAQ futures, I typically want to have, I'll write this out for you, 20 to 30 points of risk is, I think, a good range that you can be in. Now, if you're trading NQ, okay, that's $20 per point you're going to make or lose for a position in your direction. So that means on every trade that you take, you have $400 to $600 worth of risk. If you're trading with one contract and you have a 20 to 30 point stop loss. If you're trading MNQ, and that means you have $2 per point of risk, that means that you have $40 to $60 of risk on every trade that you take, trading one contract. So when we're looking at this setup in real time, and we see us close this candle here, and we think that this is going to be the lower high, we want to catch this trend to the downside. You don't have to have a perfect entry right here. You don't have to have a perfect entry right here. If you can get an entry on this anywhere from the 759, let's call it from 739 to 729, anywhere in this range, and you keep your stops above this candle high right here. Let's go ahead and let's erase this so we don't get too much on the screen. If you set your stops above this candle high, you target low a day here. You don't have to catch the full move. This alone is a 3.5 hour trade. We look at this a little closer, right? Why would I keep my stops above this candle? What does above this candle tell me is, if price breaks above this, what does that tell me about the trade? It tells me that there's a very high probability that this is not going to be a lower high and that we're going to end up trending up, likely to this next area of confluence up here at pre-market high and our 15-minute high. So if we break this, I don't want you guys, excuse my language, to lose your ass holding your trade from here up to here. And tell me, guys, how many of you guys has that happened to, where you don't have a hard stop set, you think you're going to stop here, and your trade goes from this to this? And here's where this really becomes a problem, guys. Here's where this becomes a problem. I'll show you. Okay. I'm gonna lay your trading out, and I'm gonna call you out on all your flaws here, not to be mean, but to help you improve starting tomorrow, starting tonight. Is, say that this is your stop, okay? And you're targeting a 1.5 R, which means you're risking 1 to make 1.5. All right. It looks great. All right. This all looks good. You're planning on stopping here at 25,759. You see the clear reversal here. You know that you're trying to catch the lower high, and you're trying to catch the trend move down. All looks good. If you can keep a 1.5 R risk to reward, you can lose over 50% of your trades and still be profitable. You guys realize that, right? Let's do the math. Let me prove to you can still be profitable. So if you have 1.5 W, 1.5 W, 1.5W, 1.5W, okay, and 1.5W. What is that? 367.5. That puts you positive 7.5R. Whoops. That puts you positive 7. I can't type. Go away. There we go. 7.5R. Okay, that looks good, right? Now, if you lose 5 trades, if you lose 5 trades in a row, what does that put you at? Negative 5R. So losing 50% of your trades, you are still positive 2.5R. If you lose another trade, right, at 1R, that still puts you at 6.5R positive, right? And 6R negative. So you can still be profitable with less than a 50% win rate. Now, riddle me this. What happens with that 50% win rate you have, where you're positive 2.5R, and you let one loser, one of these 1R losers, go from here up to here? You know what it does to your whole entire model? Tell me what it does, for those of you that experienced it. It skews everything. It completely skews your numbers. And guys, this is a math game. I try to keep this math as simple as I can, but it takes one bad trade to wipe out a week's worth of progress. It takes one bad unsystematic trade or unsystematic management to wipe out a month's worth of progress. Because if we let this trade go from a 1R loss to a 3R loss, well, now you're negative 8R. Now you're negative. Even with all these really nice wins, doesn't matter. You just gave back all of it. So that's why when I tell you guys that you must visualize risk, and what I want to show you over the next hour and a half of examples, is that when we use the DOD and VPA approach and we systemize our risk and we visualize our risk to where the trade is no longer valid, and you set a hard stop, which means the stop triggers, whether you like it or not, you set your order, and if price hits your order, you're out. If price hits your stop loss, you are out. There's no question about that anymore in 2026. You must have an emergency stop in at all times. So when we see a systematic approach like this, set up like this, say the trade goes in our way. You set your hard stop here. That looks good. You set your hard stop at this 25,759. So let's talk about for a second how I want you to manage your trades come 2026. Now, managing trades is a very fluid thing, meaning that you're not going to manage every trade the exact same. I'll have setups where I trim it 1-to-1, which means when I get to one risk, one reward, call it, I'll trim. So if I'm risking 20, I'll trim. Say I have 3 contracts. I'll take 1 contract off. I will sell 1 to pay myself for this nice entry. That means that I have 2 left. Now, how I manage these next 2, typically, if I love the setup, if I'm very confident, if I have room to work with, I'll leave my stop. I'll move it down or I'll leave my stop where the trade no longer makes sense. I don't know about you. I don't like going from green to red. It messes with my psyche, and I like getting paid when I have a good entry. So if I get a solid 1 to 1.5R trim, I will most of the time end up setting my stops at or near break even. This is where you really learn to hold your winners, especially for you guys trading options and futures on a live account. This is very, very important. So if I take my first trim at 20 points because I was risking 20 points, that means I trimmed at 1-to-1. Now, my next trim down, say at 30 points, this is my ideal trim spot. I'd say like 75% of my trades, I'm looking to trim at 1.5R. If I can get 1.5R for a first trim, I'm really happy, because that means the trade's going in my direction, and there's a good chance if I can move those stops to break even and ride the trend the rest of the way down, that 2R trim might, or my 1.5R trim might turn into a 2R trim or a 2.5R trim. And all I mean by trim, guys, is that say you have 3 contracts. That means you sell 1. You pay yourself for 1. That's all it means. So if you have 3 contracts on Tradeovate that you bought, that means you would sell 1. That is a trim. You can call it a partial. You can call it a trim, whatever you want to call it. All it means is you're taking off part of your position to pay yourself for the entry that you got within your system. Whenever I take a trim, for the most part, I will almost always move my stops to or near break even because I don't like going from green to red. But I also understand that I don't want to trail my stops too close. I don't want to take a trim and then immediately put my stops 5 points below it because your trade needs room to breathe. You've got to give your trades room to breathe. So for me, I like to move my stops to break even, then allow the trade to play out and continue on that way. Now, today's a great example. I want to fast forward to today real quick. I lost one trade. I won the second one. Now, let's talk about the losing trade first and what we saw from a systematic approach there. We opened the day very, very choppy in the pre-market. We don't really have any set direction. We can see that we have a range down here and we have a range up here. We don't have any series of higher lows or lower highs. This is what we call consolidation. That doesn't really give me a clear picture of where we're going to head in the pre-market. So we begin by watching price on the open. Now, what do we always want to mark out each and every morning? We want to mark out our pre-market low, and we want to mark out our pre-market high. So now that we have that marked out, we're next going to mark out our 15-minute high and our 15-minute low. 5, 10, 15. Okay, here we go. Now that we have that marked out, let's talk about what we see and what we can do with this. First 15 minutes, I do not trade. Arguably the first 20 minutes, I do not trade. It is very rare. I'd say 98% of the time, 98 out of 100 trading days, I do not trade the first 20 minutes. And why is that? Why don't I trade these first few candles here? Type in the chat why you think I don't trade the first 20 minutes. The nerdy answer is that I don't have a statistical edge. I don't have a high probability to make consistent money doing that. That's what my data tells me. I've been tracking my data for a long time. I don't have an edge here. And quite frankly, guys, like on an emotional state, like I find myself more stressed when I'm trading in this first 20 minutes. And something I value deeply as a trader is my ability to enter trades without stress, without emotion. So when I notice a pattern of any sort of trade that's giving me emotion, I'm going to act on that. So I avoid that first 20 minutes. Now, what I see here on this impulse candle up as we sweep pre-market low, we sweep our 15-minute low, we see an aggressive push up. Now tell me, what do we notice about this aggressive push up here in accordance to volume? We have solid volume here. So that tells me I think there's a high probability that we break out of here on the way up, but I'm not going to immediately buy here. Now tell me, answer in the chat. I want this to be interactive. Why do you think I don't just blindly buy here? Why don't I just take a trade right here and ride it up? Because if I'm going to put my risk right to where the trade's no longer valid, if I'm going to use the trend setting candle low, and what I mean by the trend setting candle is the candle that sets the trend here. This candle is higher volume, strong body. This candle is supposed to set the trend to the upside. If I'm going to use that low, that means that if I enter here, right, I'm going to have 65 points of risk. Far too much. Now you can look at this chart and you can say, well, Jay Dunn, you could have just bought here and you would have made money to the upside. Sure. You could have randomly blindly shorted here and made money to the downside. You could have blindly bought here and made money to the upside. Just because you can make money on a specific setup doesn't mean it's a good setup. You can make money a million different ways, a million different times of the day. Doesn't make it a high probability repeatable setup over time. So how I look at trading in my boring sense is that I want to see a deep enough pullback to where I can mitigate my risk. I can control the outcome of my trade from a downside standpoint. I can't control if it goes up. I can't control if I make money. I can control how much money I lose. So for me on this, I'm looking for a deep pullback at this point into, let's go here. Nope, excuse me. Let me pull this up into our 50% retracement. So if we pull back down into the 710-ish area is what I'm looking for, that gives me a little more leeway to try a trade in here, to keep stops below pre-market low or below the trend-setting candle low, and to not lose my ass with an extra 40 points of risk if we go from that 715 or that 735, 740 all the way down to that 710. That's how I look at risk. So, mind you, I lost my first trade I took. So let's talk about how that played out. We then see a second candle up here with lowering volume. I don't love that. And we see a final candle up here, right, with an aggressive move up over 50% of the candle wick to the upside and down. Now, even though this has higher volume, guys, I need you to take this into account. Whenever we see important, I'm going to put this, whenever we have an important note, I need you guys to remember, I'm going to write this. Important note. Whenever 50% or more of a candlestick is a wick to the opposing direction, beware. Now, what that means for you guys is even though we have a close above pre-market high here, even though we have rising volume, over 50% of this candlestick is a wick, which means even though it's green, you might look at that and you might say, oh, well, we opened the candle here. We closed it here. That means we have to keep going up right here, right? Because it's higher volume. And Jay Dunn said if we have higher volume and the candle's green, right, we have to continue in that direction. Not always. This becomes warning sign number one. All right. I'm still open to a pullback at this point because the trend for intraday is up. And again, I'm a trend trader. I trade where the trend gives me, and I'll take reversals on occasion when they present themselves. So we see that 50% of the candle here, which means I'm not just going to blindly buy here when we test this pre-market high. I'm going to wait till a deep enough pullback where I can define my risk. We then see an aggressive pushback to this 15-minute high here. I'm still a little cautious about at this point because of the fact that we have this aggressive reversal candle here. However, as we begin to move down, as we begin to move down, right, from our 15-minute high into the 720-ish area, the 720-ish to 710-ish area, this is where I'm willing to try my longs. I don't love the fact that we get this close below the 15-minute low. And I set my stops here, 20 points from my entry around the 720 area at this whole cycle number 700. Now, had we gotten a deeper pullback and hadn't had this aggressive push up prior, say that we would have gotten the pullback after this first candle move here, then I'm willing to add lower, keep my stops below this trend setting candle, and ultimately you can see the setup ends up working out. We end up having a higher move on the day and making new highs. That just wasn't the scenario it gave us after this move up. I wanted to see us come down here, find some support in this 50% retracement area in the middle of this impulse candle, and make our way back up to new highs. But I wasn't going to sit there and let the setup go from a 720 entry right down with 45, 50 points of risk to the 675. So on this, I set a stop at that whole cycle number at 699. Actually, it was just below 700. And I get stopped out and this move down. Do I sit there and whine about it? No. Do I sit there and stress or add to the position? No. Instead, what I do, and I say this live, is I say, all right, guys, that setup didn't work out. Doesn't mean it's a bad setup. I take that 100 times in a row. Instead, I'm going to take what price is doing for me, and I'm going to wait there. I'm going to find a DOD-based setup. We get the stop out. Now, what do I start looking for? If you listen to what I told you in the last 30 minutes, what do I start looking for in the setup? Can anyone point out the next trade that I'm looking for before it happens? as we're right here, and we press play here, okay, we enter the longs in this move down around this like 720-ish area. I get stopped out, okay, right here, before anything else has happened. What am I going to look for now that we've broken this 15-minute high? We have increasing volume, aggressive sellers stepping in to the downside. What am I going to look for going forward? I'm going to look for price to retest up back to that previous area, right? Let's go here. Back to that previous area. And actually, let me rephrase that. It's from here to, there we go, to this midline. All right. I'm going to look for price to retest back in to the 710 to 720 area, find a lower high with our maximum stop loss above 740. So if I can get an entry around 720 and keep a stop where it's no longer valid above 740, that is a high probability trade. That is what we look for in real time, not hindsight, not, oh, I told you this after the fact. Before it happens, we look for a trend entry and what price is telling us we want to do. So we play this out. We get the move up to here. We get our entry around the 720 area. Call it 715 to 720, wherever you may have added. We get the wick up. We take our entry here. We keep stops above the 741, worst case scenario. And on this trade, we are looking to target, based on this VPA setup, we're going to look to target at a minimum 1-to-1. We'll put our entry at 718. Let's be fair. At least 1-to-1, and ideally 1.5 hour. 1.5 hour would put us at this pre-market low, but we'll settle for 1-to-1. Let's see what it ends up giving us. We get our entry here. We see price move down. Now, on this move down to 690s, this is my initial first price target, right? Because at 690 here, we notice we're at that a little over 1 R, like 1.2 R. It's not 1.5, but it works for what we're looking at because we're over 1 R. As long as we can win over 50% of our trades, we're in a good spot to stay profitable. So I take some offer on the 690. My next profit target that I'm looking for ends up being a break below here and ultimately down to 675, which would have given us a 2R trade. And I'd say 40 to 50% of the time that we see this, you're going to see us move down and continue this trend down. What you see here is going to end up being the lower high that we catch, which gives us the trend entry for a downside day. And when you're trading on a live account, guys, it only takes catching one out of every 3 or 4 that you take to get a 2, 3, 4 hour trade. And for those of you that have traded live with me every day, you know that not every trade I take is 3, 4, 5 hour. I focus on 1.5, 2 hour trades, keeping over a 50% win rate. Typically it stays 70 to 80%, managing my risk aggressively. And when we get the times where we get the nice entry, we get the trim off and our trade runs like this and makes a series of lower lows and lower highs. That's what pays us big time on our live account. That's what pushes our multiple way up. That's what takes you from small losses and small wins to small losses and big wins. So we get that entry there. We take our trim below 690. Everything looks good. We get the trend entry. We follow our plan. We stay patient. And after that, that is when you set your stops, hard stops to break even. Always, always, always in 2026, once you guys take a solid trim, you pay yourself for your good entry. I always want you setting your stops to or near break even, whether you're trading options, stocks, or futures. Okay? So that's what we do here. We're hoping, right, that the market goes in our direction. We don't dictate that. We set our stops. We control what we can control, which is our risk. And on that, we set our stops back at break even. Market moves back and forth, goes down, tests the 680, ultimately ends up coming to stop us out. Now, at this point, when I go from red to green, or if I'm just green on the day, I don't sit there and overtrade. You can arguably look at this. And from a price action perspective, whenever you see price coming up and rising on volume, breaking structure, you can look for upside setups, right? You can look for different setups throughout the day. But what I don't want you guys doing is I don't want you guys trying to catch this move and then this move and then this move and then this move and then the next move, because over time, your statistical edge is going to go down the more trades that you take. And I want you guys to have a high statistical edge, not a low one, over trading and taking more and more trades. Now let's go here to a different example, right? And then we're going to take a moment, ask some questions, and we're going to go back and we're going to hammer these until you all understand exactly what you need to understand. Let's pick a random day, right? We see here. Let's get out of replay mode. Let's leave this. Now, this is a disaster. Let's remove all 31 drawings and go back to, we don't want all those drawings. Now, when we go back to a random day, let's go to an aggressive uptrend day. Like we see here. This is great. Let's mark out first our pre-market low. Okay. Which is right here. Let's mark out pre-market low. And then let's mark out our pre-market high, which ends up being right here. We're then going to mark out our 15-minute low, which is right here. And let's coat that green, not to get it confused. And then 5, 10, 15, our 15-minute high. All right, right here. Now, when it comes to reading action on aggressive days like this, it doesn't give us much chance at any pre-market low. Doesn't give us much chance at any pre-market or at 50-minute low. Doesn't even give us much chance besides an aggressive break in the first 5 minutes above pre-market high. But what I can tell you about a setup like this is when you see aggressive action above our pre-market high with 15-minute high much higher, this is where you're gonna be able to find using our 50% retracement in 61.8 much more beneficial. We mark this out, right, from our 15-minute high to 15-minute low, and you can see here that even though we never get any very strong candles above our 15-minute high, it never gives us that strong orb setup. You never get that strong trend-setting candle above the 15-minute high. There's no real orb setup here for us. However, what do we notice? Every time we come near within, what is that, 452 to 460, within 10 points of this 50% retracement, we see an aggressive push with higher volume. Aggressive push down with higher volume. Both of these tell us, if you are trading, that you should not be trying to short the top. If nothing else, what this can tell you, even if there's no money to be made, right? You can arguably say, well, we tested near this 50%. If we retest into this candle, I'll keep my stops below this candle and try the longs up. Or if you see a strong, aggressive 5-minute closure like this with higher volume, you could say, I might test into here. What's the low of this candle? It's 460. So if I can get 20 to 30 points of risk on this candle, we'll try the longs with stops below the low. I'm open to you taking some sort of trade like that. Right? Any sort of VPA trade based like that, as long as your risk is defined. That's what matters. What I don't want you guys doing is saying, well, we went up all this way, so now I'm going to try to tick the top and catch the waterfall back down. That is what will ultimately lead you to losing the most money, is when you guys are consistently trying to top tick entries and bottom tick entries. I want you becoming trend traders. The only time I'm okay with you guys in 2026 taking reversals is when you have a clear sign of a reversal. When you test a key level, when you have a clear 5-minute confirmation that price is reversing and you have clear defined stops. Let's use this as an example. All right. I wouldn't necessarily use this because we didn't close this 5-minute candle below, but let's just say, for example's sake, that this 5-minute candle is very aggressive to the downside and our 15-minute high was right here. Okay. we have aggressive wick here, failure to go higher, and higher volume, which means that sellers pushed us down. So if you wanted to take a reversal here, you could try the shorts or your puts. The top of the candle is up here at 600. This is at 570. So if you wanted 30 points of risk, you'd have to enter your shorts here, keep stops above this. And if we go above this high, it means that you are wrong on the candle. You're wrong on your read, and that's okay. We're all going to be wrong at times. You need to understand and accept that you are wrong on this and stop out. Instead, what happens to a lot of you guys is you want to catch the reversal, you try, and instead your position goes here, you add a little more here, you add a little more here, you add a little more here, and you got yourself a whopping size loss trying to top tick. Or even worse, trying to bottom tick when price is nosediving. So whenever you guys in 2026 are trying to catch reversals, it must be with a clear sign. If you have a key level, you have key level here, and you have a strong reversal hammer here with higher volume, you can try the reversal, stops must be above. Or if you see a key level here, and you see candle here, failure, candle here to go higher, failure, that's fine. Stops must be above the previous high, because if price moves back up above that and you make a new higher high, it shows that your analysis was wrong. And you save yourself from getting waxed if you continue to move up and make higher lows, higher highs, and build up in the opposite direction of what you wanted trend to move in. That's what you guys must understand about catching any sort of reversal in 2026, to the upside or to the downside. You can make a lot of money trading reversals. You could also lose even more. Does that make sense for everybody here? Do you guys understand what I'm saying when it comes to catching reversals? All right, that's good. Now let's go to a different example here. Another example. I want to run through as many examples as we possibly can. Every single morning, you're going to wake up and you're going to mark out, okay, where is our pre-market low? Let's go here. Let's go ahead and let's mark it out. Our pre-market low is right here. Okay. Where is our pre-market high? Pre-market high is right here. Market opens. Life's good. We're then going to mark out, okay, where is our 15-minute high, which is right here, and where is our 15-minute low, 5, 10, 15, right here. So now that we have that marked out, we see aggressive move off the open. We're then going to mark out with our Fibonacci retracement tool in the direction where price is heading. Where's our retracements at? Now, there's also a different angle I want you to take with this too. If we have aggressive price movement like this, I always want you knowing where your midline is of the first 15 minutes. But something you can also do on trend days, because oftentimes we move out of the 15-minute range. So what I want you to understand here is that even if we move out of the 15-minute range, you can still use our Fibonacci retracement tool to catch trend entries. So for say, we know that our midline is at 373, right? This 370 area, you call it. But we had this aggressive push down here on this 246. What I will do sometimes is if we have an aggressive trend move happening, is I'll take this, right? And I'll see where is our 50% retracement and our 61.8 going to sit from high of day to low of day. And do you see what this gives us almost to the cent? We touch this 50% retracement almost to a cent. And that becomes our rejection, our new lower high for this move down. Now, here's what you can look at too. Is we see price moving. Let's go ahead here. Let's go ahead and let's replay this. We see price moving. You have your levels marked out. You know your 15-minute high, 15-minute low. Okay. We marked that out. Now, at this point, we know that our midline is up here on this 370. Looking at this, say we broke pre-market low. We're breaking near Asia low. I think that we're going to have an aggressive downtrend based on how aggressive this selling volume is. I mean, these are very high volume candles. So now I'm going to say, what is our retracement from our high of day to our low of day? And where can I look for the best possible trend entry with VPA? So let's go ahead and start this. As we're watching price move back and forth, right, we start consolidating. We don't have any clear sign of entry yet. We see an aggressive candlestick move back up here. We break back above that 15-minute low here, right? We do make a higher low, but you haven't convinced me yet that we're going to move back up because we haven't built above any sort of key levels. We move back and forth here. Now, even here so far, right, we have this aggressive candle down. Whenever I see an aggressive hammer down, that's a very strong candle that tells me we will likely move in that direction. Why am I not immediately running to buy shorts or buy puts, to short shorts or to buy puts here? Not to say it's a bad idea. Why am I not immediately running on this candle to go buy it? Because we have lowering volume, right? If we would have had higher volume on this candle, you bet your butt I'm going to, on this next pop up, I'm going to look at where's the high of these trend setting candles here. All right, 348. So if I can get an entry around this 310 to 320 area, right, have 20, 30 points of risk, probably closer to 30 points of risk with stops above this candle high, I'll take that all day, every day. If we have higher volume here, a strong push down below this 15-minute high, I'm going to try the shorts on this pop up, try the shorts in here, target low a day here, and try to catch this entire trend move to the downside. We don't have higher volume, so it makes the trade higher risk. Our statistical edge and our probability to win the trade goes down. So instead, we wait. We wait, we wait, and we wait. We consolidate. We wait while we consolidate. Now, we go back up, retest again. We still haven't broken out of this range. Now, as we start breaking out aggressively, this is where I start watching for, oh, hold on, come back. This is where I'll start watching for trades. We break down low of day. We break down this level. Whenever I see us have two solid trend-setting candles, we see an aggressive candlestick down here. I wish we had higher volume. We had average volume, not higher volume. And then we see a very aggressive candle, full body, with very high volume. This right here tells me this is likely to be a very strong trend to the downside. Now, this is a little bit more of an advanced concept, but there is something I will do sometimes, and a lot of you guys have seen it live on occasion. When we see an aggressive candlestick like this, and we have two full body candles in a trend direction back to back. On occasion, I will look for an entry on a candlestick if I can find a 50 to 61.8% retracement within that candle. Now, here we clearly don't get that, but for future reference for you guys looking to have another tool in your arsenal, that is something that you can do, is you can look for a retest into this candle, the 50% retracement with stops above the highs. So the high here is 265. That would mean we'd want ideally like a 235-ish entry, which would put us right at the top of this range. That gives us 30 points worth of risk. So on occasion, if we see an aggressive trend-setting candle that's supported by very aggressive volume, I'll measure the 50% retracement of this candle with stops above the highs. What I want you guys to understand here is that it's more so about how you manage your risk in the strategy versus the actual strategy itself. Okay, we're trading VPA and price, but what matters here is if you take this 50% retracement and you allow your loss to go up to here, that doesn't make any sense, right? You're going to have way too much risk on this. But if you can see this setup happen, I want you to think not in terms of this trade, but over the next 50 trades. If you can take the setup and lose 30 points from here to here 50 times, but if you can catch, let's see what happens next here. If you can catch from here down and more down, and I think even more down, but even from here, from like 228, yet here we go, 225 down, You catch a lot of move for a little bit of risk over a long period of time. But what you must understand, what you guys have to understand here, is that this setup will lose. Okay? The great setups I've showed you today with VPA will lose. The most simplest setups in the world, where you have 15-minute high, 15-minute low, you break below 15-minute low with higher volume, you retest back up, you try the retest and it moves down, great setup, it's going to fail sometimes. So as long as you manage your risk on the times it loses, and you have the discipline and the accountability to manage your risk and keep that risk contained on the times that this setup loses, you'll be good to catch the aggressive move to the downside or the aggressive move to the upside over a long period of time. And that's the mindset shift with your strategy that you have to understand, is that we use this strategy, we use the break and retest, we use high probability setups only to catch these bigger moves. But that comes with the cost of you're going to lose the setup sometimes. Now, on aggressive trend down days like we see here, these offer a lot of opportunity, but what can these also invoke in us? Whenever you see a setup like this where you don't have a lot of extremely aggressive pullbacks and retests, like there's little ones in here, there is a little opportunity, but what can this invoke? I think we all have a common denominator answer. It can invoke FOMO. What you guys must understand is that, and this is something I tell myself every time I see an aggressive setup like this to the upside or downside that I might not catch. I might catch it, I might not. If my system fires, I'll catch it. What you guys must understand is that this setup is going to come over and over again. You're going to see aggressive moves to the upside and downside over and over again that you're going to get the retest with high volume to confirm. You're going to get that retest up here where you can try it, you can set your stops, and you move down. What you cannot keep doing is stressing about missing this, or stressing about missing this, or stressing about missing this, and you wait, and you wait, and you wait, and you short right here. Do you know what happens next? Let's see what happens next. Well, you might actually make money this time. You short at the bottom here. You get stopped out on the move up, or you wait and you short at the bottom here, right? You try to catch the bottom move. And sometimes it works, but oftentimes, here's what happens, is you try to short and you get your butt handed to you on a move back up. And then you say, oh crap, I got to keep adding. And it keeps moving up, keeps moving up. Sometimes it goes back down, but the point is you likely don't hold from 990 up to 2590, 100 points, 200 points. You cannot afford to FOMO into trades anymore at the bottom, or FOMO into trades anymore at the top. What the DoD system is predicated on is your ability to wait for A+ setups, wait for your retest, and capitalize on those retests. That's what you need to do with the DoD system. Let's go look at another day, right? So we go in, same system every day. We mark out, where's pre-market low? Right here. Coat that blue. Where's our pre-market high? Right here. All right. Where's our 15-minute high? Same spot here. They're lined up. Where's our 15-minute low? 5, 10, 15. Right here. All right. We have our blueprint for the day. Now, as we see, this is a good one. This is a nice setup here. So we have our 15-minute range here. We never quite we do get a solid reversal candle here, which let me go over a situation where you might actually try a trade that doesn't work out. So there's a setup trading I'm not calling it the orb anymore. I'm calling it the opening range read. I was going to put a slide in there about that, but I took it out. Calling it the ORR, the opening range read. Because I feel like I don't like trading breakouts. I think breakouts invoke anxiety, they invoke emotion, and quite frankly, breakout trading is hard. We're calling it the OR from now on, the opening range read. When we're looking at the opening range read, trademarked on December 30th, 2025, and we see a sweep of the 15-minute low, an aggressive push up, that tells me with this higher volume, there is a chance that we reverse. Now, before I tell you that, you should go and try this higher low here, why would I caution you to try a long? Based on what you've learned today, why would I caution you to try a long just quite yet on this trade? What do you notice about this chart? Look really carefully. Tell me what you notice about this chart. And the key levels. There's another hint in the key levels. What is nearby that has not been touched or swept yet? You have pre-market low right below it that has not been swept yet. A lot of times when we have these nearly stacked, I mean, they're what, like 40, 50 points apart. A lot of times I like to see us come sweep 15-minute low, sweep pre-market low, and then build back up. Because if we sweep those levels, a lot of times it takes liquidity. And then we'll build our base back up to go retest that 50% retracement or go retest that high of day. So whenever we have our pre-market low right below doesn't quite get swept, there's a good chance we're going to want to go test that first, almost as a magnet, and then move back up. So we see this move up here, and then we fail. We have lower volume on this, so we don't quite take this yet. Now, on these moves down, we have this aggressive body close here, lowering volume, still average, not lowering by much, and then we have an aggressive candlestick to the downside. Now, tell me, chat, when we close this below 15-minute low in our pre-market low, what is that telling me about this chart at this time? What is this chart telling me? That we're downtrending. There's no reason to be trying any sort of longs down here until we build a base above this 15-minute low here and above this 50% retracement. Until we see some sort of confirmation, prices moving back up with higher lows, prices moving down. So before we ever see this, we know that on this aggressive push here, I'm going to likely look for a retest back up to pre-market low, where I can keep my stops here, right? This is 230. What's the high of this candle? 265. So I can keep my stops around 30 points here. If I have a stop above this wick high here, worst case scenario, I can keep a 30-point stop here and try to ride this down. Say that I don't want to try this entry quite yet. I'm not quite confident enough. Well, after this aggressive failure, this over 50% wick here, like we talked about earlier, we see, all right, this is telling us that buyers failed here. They tried to close higher, but a majority of our buyers chickened out. Our sellers are still in control. So let's look at where this wick is, 235. So if we can get around a 200 area entry, I believe this is a trade we took live inside Team Bull. This is textbook. A 200 area entry on this. We have about 30 points of risk. We try the trade here. We keep stops above this candle high, above pre-market high. If we can do this, right? If we can take the setup, this is an A+ setup in this area. We'll keep our stops here, 35 points, right? So you'd have to use less size if you were trading this, or keep stops above pre-market high. That puts it closer to 30. And if we want 1-to-1 out of this setup, that means we need to move down to, at this point, what is that, near low a day? That's 1-to-1. If we want to target 1.5R, which is where I want you ideally most of the time, we need to target about a 45-point move. Now, the cool thing about this is once you get to this point, you set your stops down at break even. If you go and take your next trim at 2R and you scale out by 0.5Rs, which is a very good spot as a beginner. If you start with 2 or 3 micros and you scale out at 1.5R and 2R and 2.5R, I'm okay with that if you end up missing the rest of this move. Yeah, it was a beautiful trade. We did take that, Jonathan. I thought we did. If you scale out, and let's say you scale partial here, and partial here, but you say, Jay Dunn, I missed this whole part of the move, bro. Let me challenge you with something. Would you rather partial out here, here, and here, or keep making the same mistakes that you've made over and over and over again and closing your whole trade right here? Because that's what a lot of you guys are doing. Is a lot of you guys are seeing green and taking green right here, and you're missing all of this. How about instead we stop focusing on seeing green and taking green and trading a systematic approach of base hits? So it may seem frustrating after the fact looking at you taking partial here, here, and here and missing this, but it's better than what you're doing right now. It's much more scalable than what you're doing right now. And again, it doesn't have to be complicated, guys. We use these key levels. We use what volume and price is telling us. We take defined, visualized risk where you will always have a hard stop and you can see where your trade is no longer valid. And it takes the emotion out of it. When you can look at this trade and you can take one micro here, okay, we're going to start very small for all the beginners. So that's where a lot of you guys need to start back with. Let's say we take one micro here at 200 and we have a 235 stop. That's 35 points of risk. How much is your max risk on this trade? With your hard stops in, it's set, you're good to go, you let your trade play out. Hard stops are in here. What's your biggest risk is $70. So if you take this trade and it hits $70, where's the emotion? You take the emotion out when you accept the risk on the front end. You swallow the risk, you control what you can control right after it, because then when your trade loses, it doesn't hit you like a freight train. What keeps hitting you like a freight train is when you take a trade, you have no idea what the hell you're risking, and your trade runs out of control, and then you end up blowing your account and having to buy another funded, and having to buy another eval, and having to refund your live account. You see how that hamster wheel replays over and over again, and it's a very unpleasant process. It makes you genuinely start to hate trading. I went through periods, especially early on, where I just was so angry at my trading. I'd just get so, it would literally hurt my soul when I would take these massive losses over and over and over again. And what the DOD method did, and what this visualized risk method did, was it takes that heartache out. I mean, sure, it sucks losing, but at least when you lose, like you guys see me lose all the time on live. You've been trading with me for months. I mean, you've seen me take plenty of losses. It happens time to time. I win a lot more, but I do lose. And if I lose, I'm like, well, I had it planned before. I lost. It's part of the game. I'll be back tomorrow. You don't get to be back tomorrow if you're on the hamster wheel of blowing evals and blowing fundeds and blowing live accounts. I mean, you can come back tomorrow, but eventually that tomorrow is going to turn into early retirement, not in a good way. You have to stay consistent with waiting for these setups. You'll get a few good setups a day. You'll get the breaks, the break and retest of the pre-market low. You'll get the breaks at the 15-minute low. You'll get the high probability reversals. You'll get all of these setups, right? Even arguably here, say we had down here at this 20, say we had swept 25,000. We didn't, but say this is 25,000. If you sweep a whole psych number here with a strong reversal candle, high wick, high volume here, that tells me there's a good chance this is the bottom. Because you sweep key level, you have strong reversal with higher volume, most of it wick up, like I told you guys earlier, and you move yourself to the upside. So when you see things like this, that's when you can take reversal. You'll get a few good setups a day. Not every candle is a good setup. But if you can choose DOD, and if you can stay patient and trade smart and trade safe, that's when you'll find the consistent success that you're looking for. We even see it later in the day here, right? We see this aggressive move to the upside. That looks decent. Then lowering volume, these next two candlesticks, the doji we talked about, an aggressive push to the downside. Arguably then, as you move back up, you can look for short side setup as we move into this zone. As we move into this zone with stops above that high, we never test these highs ever again. No, not ever again, but during this day. We consistently make a series of lower highs, and eventually just flattening out. You get a few good setups a day, and if you can consistently follow VPA, right, measuring how volume moves with price, that's how you're going to consistently make money in 2026. That's how you saw Aaron get that $40,000 payout. That's how you've seen people consistently in the Discord every day and on the YouTubes and wherever you're watching, consistently making progress with DOD. It's not complicated ICT. It's not complicated SMC. It's strict risk management and strict systems each and every day. Here's another great example, right? And now I don't want to complicate this too much for you guys, but there's another set of key levels that I will use on occasion. What do we see here? From a higher time frame standpoint, you can tell this was a key level. How can you tell from a higher time frame standpoint this blue line right here was a key level? How can you tell? Because we have multiple touch, aggressive move. Touch, aggressive move. This ends up being our Asia low. This ends up being our pre-market or our intraday low the prior day. We have a downtrend pre-market, right? So I look at all these things. I say, okay, we have downtrend pre-market. Let's do our usual routine. Again, let's mark out our pre-market high and let's mark out our pre-market low. Now let's go ahead and let's mark out our 15-minute high and let's mark out our 15-minute low. 5, 10, 15. It's pretty much on par with our pre-market low. So as we see that, right? And let's go ahead and let's turn this, let's not confuse anyone. Let's turn this to red. Okay. I don't usually mark that out, but for this I will. So we know here, once we break below this 15-minute low and pre-market low here with this candle, what does this tell us right here? This tells us a downtrend is very likely. We broke our low from an already downtrend pre-market. This tells me I'm going to start looking for pullbacks. If we test back here, you bet your butt I'm trying shorts here. I'm trying puts with stops above this candle all day. All day I am trying shorts or puts with stops above this candle. Now, we don't end up getting that. So again, this is a trade, and correct me if I'm wrong, for anyone who's traded with me, this is a trade that we end up taking on this next candle. What was the rule I just explained to you on one of the previous trades? If we have two aggressive trend candles in a row with rising aggressive volume, I will, on occasion, when the trend is presenting itself, take the high to the low, the 50% retracement of the candle, look for an entry in here with stops above those highs. What do we see here? We test up into this, right? We test into this candle. Look, what's the high here? 496. Where do we test up? So we need to have a test into this like 470-ish area, 460 to 470 area for a solid retest. You take this retest here, stops above this candle high, you catch this trend aggressive move down. But say you don't catch that, right? Say it's too much risk. Fair. All right. You don't take that trade. That's fine. Well, what you can do too is the next trade. We test into this, fail. We're showing more weakness here. So if you want to take, again, a failure to go higher, an aggressive wick to the downside following this trend, if you want to take a trade, right, that keeps stop defined above this candle high is 472, you have down to like 440s to take this trade. You have plenty of room in here to try this trend, stops above this trend setting candle, and ride down. Now, say you don't even take this trade. You're not comfortable with any of these, all right? You're scared, you don't want to get stopped, whatever it is. Well, we have another option with our toolkit here. We notice that this is a macro level. We have this Asia low here, aggressive move. Previous day low, aggressive bounce. But then we start downtrending. We're downtrending very aggressively. Now, what we'll notice here is when we get to this key level, we have the same setup come. Aggressive move below, rising volume. Aggressive move below, rising volume with these two candlesticks. So as we move up into this trend setting candle, you can look for the short entry here. Know that it's previous day low as well. You have significance with key level. You have VPI on your side. This is a high probability setup that you can enter the shorts, stops above where it's no longer valid. So let's see, 400 up to like 440, a little more risk, but nonetheless, on a volatile day like this, a little less size, little more point risk allowed. All right. As long as your monetary is defined, you know what your risk is before you take the trade, and you catch this to the downside. All that matters in the end is your R multiple. So if you have 1 micro of risk, all right, and say you have 40 points, okay, the 30 points isn't a mandatory. It's where I like to be. You'll see me with trades where I have 40 points of risk, but I also use less size. If I'm going to have more points of risk, I'll use less actual position size, right? That's just how it goes to keep my R multiple intact. So we get the move up and say we want to enter right here at 395 because you're not going to get a perfect entry. And so we keep our stops here, right? At this, like, let's say 45 points, 46 points. So if I have 1 micro, that means that I have $90 worth of risk. And if I'm going to target low of day here, just a target to low of day gives me a 2R multiple on this trade, meaning that if I catch this, I'm only risking 1 to make 2. This works on SPY, Tesla, any sort of names, guys, any individual names. This strategy works on. You can even arguably use it day trading crypto. I haven't back tested it, but it's just volume and price mixed. It's pure price action trading. It's pure price action trading. That's the beauty of this. It doesn't just work on NQ. It works trading options. You have to have your stops a little different trading with options because it's more percentage based versus point based, but the actual process of trading itself stays the same. So when you see a key level like this be tested with strong VPA confirmation where your volume's rising, the trend is confirming, you have your high probability entry, you can take that. You can take that with confidence knowing your risk is managed and that you have a solid price target to go towards. So that's what you must start looking for. Does that make sense to you guys in terms of what we're looking for on the retests and how VPA comes into the mix with DOD? That's how you're going to get consistent base hits and get more payouts. That's how you're going to get off the hamster wheel of churning and burning these prop accounts. We don't use bull and bear flags. Those days are over for you. And no shame. We don't use, head and shoulders or double bottoms or whatever you're trading. We're trading pure price action. We're trading VPA and DOD. That's the simple sauce that people don't want you to understand. It does seem easy, right? It's not easy. Let me tell you that right now. Damn, it's already been an hour and a half. That is crazy. I told y'all, I get into this, then I don't stop. I love teaching y'all too much. It seems easy, but it's not, guys. If you're a little confused, there's a lot going on. It's not easy. Let's go look at another example. Let's go back and find ourselves a big, beautiful example. Let's just pick a random day. Random day, any day. Pick a day, any day. Let's go dissect it. Get you guys some more screen time. Here. Perfect. This looks good. So let's mark out pre-market high. Let's mark that blue. We keep our processes consistent. And let's mark out our pre-market low. We are next going to do the same thing we always do. We're going to mark out our 15-minute high. And we're going to mark out our 15-minute low. All right, 5, 10, 15. Now, textbook setup here. We have our 15-minute low and high stacked, our 15-minute low and pre-market low stacked. We also have these semi-stacked on top. We make a move up, fail, fail. We have an aggressive candlestick with matching volume, not necessarily decreasing, but on pace volume, but a strong body and less than 50% of this candle being the wick. It's close, but doesn't quite get there. So we get this close below. On this test back up with a strong candle like this, the high of this is 805. This gets to like 80-ish. So you have 20 to 30 points of risk here. I'm open to you guys because we close below both of these levels. Trying a short up here, stops above this candlestick, and writing this down. Now think of it like this, right? You're going to take the setup. You might see this tomorrow, right? I don't want to guarantee anything. But in the next 5 trading days, I can almost guarantee you'll see this or a similar setup that we went over tonight play out. It might work. It might not work. But if you take this setup the next 10 times in a row and you can manage your risk and manage your emotions, right, to stop where you know you need to stop with this, call it 30, let's see, get a decent entry up here, call it 30-point stop. You hold to your price target, right, and you let your trade breathe and play out. If you can make this happen and win 40% of these trades and stop the other 60%, if you can win this trade 4 times and hold to your profit target and lose this trade 6 straight times in a row and follow your stop, you will be profitable. If you lose this trade, if you lose these 30 points right here 6 times in a row, you lose 180 points. If you're trading a micro, you lose $360. If you can win this trade, these 53 points 4 times in a row, you win 212 points, right? You win this, right? You win $424. You are profitable with a 40% win rate, $60. Right? That's the math. It's obviously, that sounds really simple and easy. It's not easy. I don't want you to think that. But the maths, all right? If you can simply just manage your risk, trade a set system, and wait for your A-plus entries that you have some sort of edge, that's how you're going to be profitable long term. That's how you're going to hit these trades and get more payouts. The problem is you're not paying attention. You're missing your A-plus entries. You don't have the discipline. You don't have the accountability to wait for these, and you're taking trades early, or you're chasing late, and you're skewing your edge, and you get the same results over and over and over again. That's what you guys have to understand, is that cannot happen anymore if you want the VPA and DoD system to work for you. If you want to be able to make consistent money on this long term, you wait for your A-plus setups. You wait for probabilities to be in your favor, and you manage your risk. You set your stops, and you let your trade play out. It doesn't have to be any more complicated than that. It can be if you want it to be. A lot of you guys like to make your trading lives a lot more difficult. And for the life of me, I can't understand why. But if you take what I've taught you so far today and you apply it, and you choose discipline over dopamine, and you follow the scaling plan that I've built you, you're going to have a better 2026. You just will. There's no way you don't improve. It's just like when you go to the gym every day and you eat healthy. Eventually, you're going to get in better shape. You're going to look better. You're going to feel better. If you follow these risk management practices, if you follow a VPA, if you follow a strict risk protocol, and if you follow the A-plus setups that I have given you today, you are going to see a better 2026. I'm not saying you're going to get rich quick. I'm not saying you're going to get rich at all. I'm not even saying that you're going to be consistently profitable if you keep getting in your own way. What I can tell you is you are going to have a better 2026 if you apply what I have taught you. Jaden, I learned a lot today. I appreciate you. Now, again, let's do another example. Then I have a few more slides for you as well. Let's talk about this previous day. Previous data here. What's the daily routine? We mark out our pre-market high, right? We coat that blue. We then mark out our pre-market low. We know that we had a dip and rip here. We then are going to mark out our 15-minute high, which is right here. It's actually a little higher, excuse me. And our 15-minute low, and we're going to turn that what? Green, not to get it confused, because we don't want to confuse ourselves. So, turn that green. Now, this is actually a really good example. It just shows how price moves level to level. Now, we move up. We make this high, low. Now we break through. This is one of my favorite setups, guys. This is a banger we caught in Team Bull. I think this was a Friday. This is one of the Fridays I was trading live at the office. Was anyone here at live with me at the office? There's only like 12 people there. Tyler, were you here? Someone was here trading live with me. I have an office that I trade live with people. I also do all my trades online, on course. But this was the trade we caught on the 5th. Yes, this was live in person. I made a video on it. You can check my Instagram for proof. It was incredible. One of my favorite setups here. I don't know why I must be getting old. Like the setups, I'm like, ooh, Christmas morning. I love setups like this. All right. This is a breadwinner, guys. You see this setup. Nicholas was here. You see the setup. This is a banger. All right. So we have our 15-minute high and our pre-market high. We have an aggressive full body candle with higher volume above what? Above both of these levels. So when we retest back into this, call it pocket, we make our 15-minute high and pre-market high pocket where we had a trend-setting candle. A lot of the time, you're going to see us retest up and continue the trend. The reason I loved this trade is we go down, we enter around 771. Like I said 770 to 780 was the entry area, right? On the 770 area, down to this 440, we had 30 points of risk. So from our entry area around here, around 30 points of risk. So we draw that out. We go here, 770. And we're going to put our risk down to here, right? Call it, let's just make it 30 points even. So if we're going to target here high of day, that immediately right off the rip gives us a 1.1 R multiple. All right. 1.1 R multiple off the rip here if we catch that high of day. Obviously, we want more. So as we move up, I take my first trim right above high day, if I remember correctly. It's around like probably 1.3 R. We move our stops up to break even, and this trade ends up going almost 100 freaking points. Almost 100 points. We'll call it 80 to be safe. But we nearly get a 100-point trade out of this, catch a majority of this trend just by waiting for the A+ setup back into our 15-minute high and pre-market high pocket. Textbook A+ setup. You wait for the retest. You enter with high conviction. You keep your stop set because there's going to be times, guys, you see this exact setup where you enter here and it flops and goes down and stops you out. It's going to happen. I'm telling you that right now, as your friend, as your mentor, whatever you want to call it, as your bearer of bad news. You're going to see this setup sometimes and it's going to look perfect and it's going to fail, right? But as long as you keep your 30-point stop in and you can catch 30, 40, 50, 60 points to the upside, this setup's going to work 50, 60, 70% of the time. And you're going to get paid if you can manage your risk on the times when it does not. Right? We then see price, right? As we move down, right? We see price come, fail this 15-minute high. We see another failure. I don't love this wick here, so I likely don't take this retest. However, if you did, retest pre-market high, hold below. We bounce the 15-minute low back up. I end up liking this setup again. Why do I like this retest of pre-market high and failure here? We retest back up. We have rising selling volume. This tells me there's a good chance that we test here, right? Sellers step in there aggressive. We're going to see more downside movement. We end up basically consolidating the rest of the day. But the point being is that there could have potentially been, if we retest higher, what, 763 to... You could have arguably taken this setup here and had a decent, let's see here, a decent risk reward. Let's see. So you have stops above pre-market high. I love these types of stops. Let's say we want to go for 1.1 R. Oh yeah. Right? 27 points of risk, 27 points of gain. We want to retest that 15-minute low. That's a 2.3 R trade. That's a beautiful, beautiful setup, right? With VPA confirmation. That's very simple. Right? And you can see it in real time when it's forming. You don't have to top tick or bottom tick. That's what I love about my strategy, is that it mitigates that stress of not knowing where the hell your stop is. It mitigates that stress of not knowing, right, whether price is going to move up or down. Like you're not a fortune teller. You don't have a crystal ball. You do have the ability to manage your risk. And that's what I can help you with. It is my mission to help you lose less money and make more in 2026. And if you follow what I told you, what I teach you, and what I beg you to do with discipline over dopamine, you can be successful with this. You use volume in accordance with price. You can be successful with this, right? It's like that one higher up on this guy says. It isn't easy, but it is simple. Don't overcomplicate it, right? It's his exact line goes textbook with what I'm teaching you today. It works with gold. It works with Tesla. It works with AMD, right? It doesn't matter which asset you're trading this with, guys. If you can just follow these simple rules and not get in your own way from these beautiful few A plus setups we get every day, that's what's going to lead you to profitability that you want to have. That's what's going to lead you to that point that you want to get to. Right? So I have a few more slides for y'all too. So we look at this, guys. And hopefully you guys all enjoyed this so far, right? I have a little bit more for you guys. I got a little more sauce for you guys. I got like the cherry on top, right? Hopefully you guys got a massive amount of value so far. That was my ultimate goal. So you've seen the strategy and you've seen how simple this actually is. Marking out pre-market high, pre-market low, 15-minute high, 15-minute low, and using our key levels in accordance with VPA. 1 to 2 trades a day, done by 11:30, base hits, not home runs. That is DOD. That is discipline over dopamine. And guys, a lot of you have asked. I see a ton of questions. I'm doing a Q&A at the end of this. So if you have other questions, we're not done yet. The charts are not done yet. If you have other questions, I'm doing a Q&A at the end of this, guys. I got your back. I know a lot of you guys still have questions, and I'm here. I promised you guys I wasn't leaving a stone unturned, and I meant that. When I promise on these webinars, I keep it. I'm a man of my word. Now, let me ask you guys something honestly. This is honesty hour here. All right? How many of you are sitting there thinking, okay, Jay Dunn, this makes sense, but I know myself, I'm going to try this for a week, maybe 2, and then I'm going to fall off. Is anyone sitting there thinking that? Type real in the chat if that's you or if that's been you in the past. Be honest. Be honest with me. It's okay. You're not alone here. You learned a lot today, but you still have that worry that you're going to take what you learned and some of it's going to fall off. There's a lot of reels coming in. And it's okay. It's honesty. That's what's going to get you to where you want to be. It's not where I want you to be, but that's where we're going to get you to where you want to be. And I get it, guys. I've been there. That's why I love discipline over dopamine so much. Is I was such an undisciplined person. Like I was enormously undisciplined in the past. You've seen the pictures of me. They're not pretty. And I've been there. I get it for you guys. So here's what I've learned after 9 years in this game and helping thousands of traders. Something I think you guys can take into 2026 that will really help you guys. The strategy is maybe 20% of your success. I mean, you saw it. You can see it in example after example after example. The strategy is simple. The best traders in the world all have very simple strategies. It doesn't take a million indicators. It doesn't take a million automations. It's maybe 20%. Over time, the mental game takes over. The other 80% is showing up every single day with someone in your corner, with you being able to keep yourself accountable, with you being able to not blow yourself up on the 4th or 5th or 6th or 7th trade of the week. That's what ultimately ends up being your downfall. Someone who's watching the same charts, someone who calls you out when you're worried or when you're about to do something stupid, someone who yells DOD at you over and over again and says, hey, Jesse, hey, Anthony, choose discipline over dopamine. I say this on the live every day. I'm like, guys, I'm sorry. I say this like 10 times a day, but like choose discipline over dopamine, guys. Like remind yourself over and over. You will not let yourself fall off today. Today is not the day you fall off the wagon. Today is not the day you blow yourself up. Every single day you have to remind yourself that. That's what changed everything for me. And that's what I want to offer you guys. You guys didn't spend 2 nights with me to stay the same trader you were last year. I mean, at least I wouldn't spend 2-3 hours of my time. Time is the most valuable asset we have in the world. A lot of you guys are done wasting your time. I was done wasting my time. That's why I developed DOD. You came here because you want 2026 to be different. You want to stop blowing accounts, stop buying challenges over and over, and stop making the same mistakes. I get it. That cannot continue if you want freedom from this, guys. It can't continue. You want to get paid from this skill. You don't want to sit there and run the funded account hamster wheel. You don't want to run the eval hamster wheel. And I want to help you guys do that. Not through another course you'll never finish, through something different. For the traders who are serious about making 2026 their breakout year, I want to invite you guys to apply to be a part of my Master Mentor Discipline Program. Something that I believe in fully and that I've helped a lot of traders change their lives with. This isn't just a course. You're not buying some course. This isn't a Discord you'll forget about. Not some Discord of the 20 you guys have in your lineup. This is you and me trading together every single day. Here's what you're going to get when you join. Daily trading. 5 days a week, you're watching me trade in real time. Every single day. Calling out setups, explaining my thought process, taking trades together with my exact rationale. No highlight reels, no Kobe. No look what I did 2 days ago. No look what I did yesterday. Live in the trenches with you. When you join Team Bull, you get Asian session with Gene and Jen, the rock stars of our Asia. And if you're in Team Bull already and you've traded with Gene and Jen, how has Asia session been? Have you guys made some money trading with them if you're in Team Bull? Let me know in the chat how they do, yes or no. If they're rock stars and part of the team. Great, amazing. This Master Mentor program is amazing. Yes, heck yeah, yes sir, that's amazing. Fire goats. These are not paid people talking. They could all have said terrible, but I know they wouldn't say that because they're great traders. But maybe mornings don't work for you. Maybe you've got a job, you've got kids, you've got life. That's where Asia session is amazing. Our traders, Gene and Jen, pulled over $80,000 in combined payouts this year as a stay-at-home mom. This is a stay-at-home mom. Gene is not the stay-at-home mom. and a fourth-year trader in Gene. They run our live Asia sessions every single day in the afternoon and evening, and they crush it. Because I know a lot of you guys can't trade New York, but there's so much opportunity in the evening time as well, in the afternoon and evening, and that's why we included that inside Team Bull. That's another 5 live sessions per week for you guys as traders. Between me, Jen, and Gene, you've got 10 opportunities every single week to trade live with a profitable trader. Let that sink in. You get 2 weekly group coaching calls from myself in 2026. You get a Mindset Monday and a group coaching call every single week, which is basically a group 1v1 with me. This is where we go deeper. We review your trades, we review my trades, we talk through strategies, and you get a chance to come up and speak yourself one-on-one with me with a small group of people to make sure you're actually improving, not just showing up. A lot of you guys have shown up every single day. We're done showing up. We're starting to improve. Private recorded mentorship. You get my entire mentorship and any future mentorships I do in 2026. Everything I've learned over 9 years. Every mistake I've made, so you don't have to. You don't got to get kicked. I took the kicks. I took the bruises. This alone would take you years to figure out on your own. My 2026 boot camps. You don't know about the boot camps. And every boot camp I run in 2026, you're in, no extra charge. It's forever. Whatever new trainings, intensive sessions, or deep dives I create this year, you get. You get everything that I create the whole entire year. And here's something special. The Master Mentor Program students get access to me live at my Team Bull HQ. Who else is bringing students consistently to trade live in person? Anytime you're in Colorado, you can come in on any Friday that we're there and trade live with me and learn in person. Anytime. I've had, I think, 8, 9 sessions in the last few months with students coming and trading live with me. Get a free shirt when you come too. And the vibes are immaculate. I want to meet you. I want to learn with you. I want to help you in person. I want to talk over your shoulder and help you one-on-one. You get that too. Sit next to me. Trade the open together in person. That's the experience you can't get anywhere else. No one else will do that with their students. The shirt's what got you, huh? Now, for everyone who books a call from this training and shows up, I've got something extra for you too. You'll get lifetime access to the mindset session from last night, the strategy session from tonight, and if you book a call and show up to the call, you get lifetime access to both replays forever. We're going to email them out, but if you want access to these forever and you want this to be your own personal course, you're getting access forever. Here's the thing, though, is I can only take on so many people. I like small groups. You guys know I like small groups. I like to know your name. I like to know your style. I like getting intimate with people, not like that, weirdos. I trade live every morning. I'm on these coaching calls, and I'm actually in this with you. That means I have to be selective. So only the first 100 people get lifetime access. That is all that we're taking. And if you've been in the past, you know that's the truth. You'll be learning the exact way I trade in real time every single day that I got results like these. You're going to learn everything that he learned. Aaron learned when he joined in July, and it's got a $40,000 payout today. We did not plan this. It was just fate that bro got a $40,000 payout today after joining the same program. Let's just do a quick recap of everything you get. You get everything listed here when you join my Master Mentor program. Live trading with me 5 times a week, forever. Live Asia session trading with Gene and Jen, lifetime access. Weekly group coaching calls with me, 2 times a week. Trade live at the Team Bull HQ, lifetime. Private recorded mentorship library, 9 years of lessons, all of 2026 boot camps, and a bonus lifetime replay access, must book and show up to your call. The first 100 people only get lifetime access. So here's what I need you to do. To give everyone here a fair chance at applying for my Master Mentor program and to claim one of the 100 lifetime spots, I'm going to do a 5-second countdown for you to prepare yourself. All right? Are you ready? Okay. 5, 4 and a half, 3, 2, 1. All right, here we go. If you go to joinjdunn.com, joinjdunn.com right now and book your call just to see if you're even a fit. If you're not a fit, you're not joining. I don't want to waste your time. I don't want you to waste my time. You can go to joinjdunn.com and see if you're even a fit to join Team Bull, to join our Master Mentor program, to join my Master Mentor program, and to join our live trading every day. You can go to joinjdunn.com. Mansurit said, guys, I did the mentorship. Jdunn is amazing. Absolutely worth it. That's amazing. Thank you, Mansurit. I appreciate you, bro. You can go to joinjdunn.com and just book a call. If you get there and you're like, yeah, I don't think Jdunn can help me, then no harm, no foul. You still get your lifetime recording forever. If you decide that I can help you and I can be a critical tool and a piece to your puzzle of 2026, I'd love to be. You get all of these things when you join. The first 100 people, I don't know how many have joined, but if it's not letting you in, they're likely all taken. Live trading with me, live agent session, and we're not done. I'm still doing a Q&A, guys. It's not just like, hey, go see if you're a fit and I'm leaving. I'm still doing the Q&A for you guys. If you guys have questions, we'll go right back to the charts. I got your back. Got you. I promised you guys we'll go as long as you guys need. You get weekly group coaching calls, trade live at the Team Bull HQ, private recorded mentorship, and all of my 2026 boot camps combined. You can go to joinjdunn.com, get yourself on the list, and at a minimum, keep these recordings forever. You want the recordings forever? You want them emailed to you tonight? I'll personally sit up and click the damn button to get all you guys your recordings. That's how you're going to get them. Now, let's go to some Q&A, right? You can go to joinjdunn.com if you guys would like to apply and see if I can help you with your discipline, help you with your accountability. What do you guys got for me? What do you guys have questions about for tonight that you want to know that you didn't get answered? How can I help you go into 2026 the most confident trader you can be? I'm not talking about Join Jdunn anymore. If you guys want to apply, you can apply there. I appreciate you guys' support. You guys have seen everyone in chat that's had great results, a great time. And if you apply too, you're going to get your recording sent out to you tonight for lifetime access. It will not expire for you. Everyone else is going to expire, I believe, Friday. All right, let's go one question at a time. 61 spots left to open. There's 61 lifetime spots to go. All right, let's see. What is your pre-market time? So I'm in Mountain Time. So when I talk about pre-market time, I typically use 2 a.m. Eastern Time. So I'll use what is 00 on my chart. I use 00 on my chart. Why do you use pre-market high and low as opposed to previous day high and low? So I will sometimes use previous day high and low. Like that last example we talked about, I will use previous day high or low for reference on occasion, but I found that over years of back testing, over years of collecting data, that pre-market high and low and my 15-minute high and low give me a better direction of which way a price is going to head. I don't want to have to incorporate on every trading day because then we can get really complicated. We can go Asia high and low, previous day high and low, previous day close, previous day open, pre-market high, pre-market low. You see how you can add in all these different levels and like things can get really complicated really fast. I don't want you guys complicating your trading. That's why I wanted to give you a simple system of if you mark out pre-market high, you mark out pre-market low, you mark out 15-minute high, you mark out 15-minute low. You do those things in combination with VPA, you're going to be in a much better spot. Now, I'm getting this question a lot. What exactly can you guys journal? That's a great question. There's two things you can do. And I'm kind of old school at times. Like I will use TradeZella, but honestly, I love either A, using Microsoft Word, or B, you can even go real old school and use pen and paper. If you struggle with journaling, you know what I challenge you to do? I challenge you guys to get a pen and paper. It costs you like $4. And I challenge you for the first week of 2025 to start your journal. Start your trading journal. And this is going to go back to the basics. But if you want to list some things to journal, let's talk about it. We're going to talk about, for one, the basics. What is your P&L for the day? Very clear. Number two, what was the playbook setup? Now, what that means is I want you, if your application is pending approval, you'll have to ask the team. I don't know if all 100 spots are filled. What was the playbook setup? You should be able to explain your setup and what you took to a third grader. Meaning that if you took, like we saw here, a break above our 15-minute high and pre-market high, we were taking that retest back down. We were taking a retest of the 15-minute high and pre-market high break with stops below the trend-setting candle. That's what I would write for my playbook setup. When you know a playbook setup and when you can put a name or a description to a trade that you take, it's going to make it much higher probability that you have confidence in that setup in the future. And you building confidence in the setup. Like I can show you this setup 100 times, guys. I can show you this right here 1,000,000 times. But let's say we see this exact setup happen tomorrow. Do you guys think you'll be fully confident in trading this and putting size on this tomorrow? Yes or no? I don't think you'll have full confidence in putting full size on tomorrow because you haven't experienced the emotions of actually trading it over and over. I think you'll have more confidence than you would have before this webinar. But here's the thing, is that if you want to build full confidence in a setup, you got to trade that setup and manage that setup over and over and over. So now that you've seen this and you can journal this as the setup, when you see this happen repetitively over the next few months and years of your trading, you're going to get more confidence when you see this happen to take it and execute on it and to hold it to its full potential. That's what I mean when I tell you for number two to work on to journal your playbook setup. Number three is I want you to journal one improvement or one flaw you can make. Then four, one thing you did well. I don't want to complicate it. I want you to type out and journal one improvement you can make and one thing you did well. And finally, right, of everything else, I want you to write down to the best of your ability what your emotional state was and recall your thought process to the best of your ability. So if you can journal these 5 things. Oh, I forgot one. I'm so sorry. Number 6, huge. I can't believe I forgot this. The biggest thing, risk versus reward on the trade. How could I forget that? The most important one, the risk versus reward in the trade. If you journal these 6 things right here alone, and you execute A+ setups every day, you are going to be in a much better spot a month from now, a week from now, an hour from now, right? If you do this tomorrow, right? It's New Year's Eve. Market's probably going to be slow. But if you do this on Friday or this coming Monday, and you consistently repeat this over and over, and if you can set aside 10 minutes a day to do this, you are going to be a much better trader by the end of month 1. On that roadmap I gave you last night, you are going to get to where you want to be a lot quicker by January 31st if you journal these 6 things. You can journal a million things. These are the 6 most important. This is what's going to give you the most confidence, and building your system. This is what's going to get you to where you want to be over a period of time. I'm not saying it's going to be tomorrow. I'm not saying it's going to be next week. That's what I want you guys to understand is I will never put this get rich quick BS into your head, but I tell you that if I can do it, and if Aaron can do it, and if all the people you've seen in chat can do it, why can't you? Why not you? How would I manage risk reward for options? That's a great question. So you heard me talk a lot about points. I traded options for a long time, and I've thought about getting back into it. I was talking on live the other day. I opened an account with $50,000 in it, strictly for options in 2026. I want to see what I can grow it to. So I have to keep you guys updated on that. But when I'm trading options, typically I want to keep my risk. I'll type this out. Options risk. Typically, I want to keep my options risk to 20 to 30%, right? And I don't say anything low like 10 to 15% because it's very tough, especially if you're trading like next day expiration, to have a 10% risk with any room to breathe. So options risk is 20 to 30%, meaning options reward must be at 1-to-1, right? 20 to 30. 20%. I can't type. 20% to 30% for 1-to-1. So if you take a trim off, say you have 2 contracts on SPY/QQQ, and if you take trim one at 30%, right? Your next trim would have to be at what for 1.5R? 40%. Now, here's what you have to remember. What's different about options than futures, guys? What's different here? Can we just set our stops for our points and just like let it chill? Or no? You have theta decay. That's right. So say that you take a put position right here. This is NASDAQ, but just pretend this is QQQ. Okay. So say you take puts right here, which puts you make money when stock goes down, right? In layman's terms. Well, we go down the rest of the day. However, over this period of time, your contract is going to decay. So you almost have to have a stop loss on your premium price at your break-even point. So even if you're slowly moving, right, you might have gotten in here, but your likely break-even by this point is going to be around here. Because theta decay during this time is going to decrease the value of your premium in your contract. Now, again, we could have a whole separate, I could teach you about options for 3 hours, guys. I'm just answering questions for the options traders here who want to apply my strategy to options. All right. But that's how I would manage my risk and how I have managed my risk. And that was my biggest year. I made $842,000 in a year trading options. It just got to be a little too stressful back in 2024. And the market wasn't moving how I liked. I didn't like how premiums were moving. So this year I kind of migrated. A lot of my students were trading futures. So I was like, it's the same thing. It's a different instrument and it's a little simpler. I still like options though. Options are fine. Any tips for backtesting when trying to learn a new strategy? Yeah, to stay consistent with the process. Like when you're trading, when you're backtesting, right? And when you're looking through setups, how I like to do it is say that I'm testing the strategy, okay? And I'm going back. TradeZella has a great backtesting feature, might I add too. But say I'm just I'm doing my trade replay. You know, I'm going to really boil it back down to 0 and I'm going to start fresh, right, on each and everything. So we go back to square one to market open. I'm going to say, all right, let's go ahead, pretend this is market open here. I'm going to slow this down to, 0.3, 0.2, whatever. And I'm going to mark out, all right, so I know here going into the day, this is my pre-market high. I'm going to keep my same process, mark that blue. This is my pre-market low. Okay. Now let's see here. Right, so I'm going to stay patient, wait these first 15 minutes, choose DOD. All right. Our 15 minutes are in. So let's mark our 15-minute high. Let's coat that green, not to get confused. And let's coat the 15-minute low green as well. Now, let's go ahead and play this out. Let's move this. So I know that my pre-market low is down here. I know that if we end up getting a downtrend, I'm going to want to see a break below here with rising volume. If we do that, I'm going to target pre-market low. Okay. We have a bigger gap between 15-minute low and pre-market low, which if we get some downside pressure, at least I'll have a profit target here, right? And have a good distance between 15-minute low and pre-market low to target, right? So all options are on the table. I'm never going to be strictly bullish or strictly bearish biased. All options are on the table. I'm going to follow what the trend gives me. I'm not going to be ignorant and having a daily bias and sticking to that daily bias and that only. Okay? So let's go ahead and play that out still. All right, we wait. We got some forward movement. Okay, we get to this point. We see this candle close. I know we break above the 15-minute high, above pre-market high, with rising volume. I can see that our buyers are very aggressive here, extremely aggressive. So that tells me I want to catch this trend. I think we have more room to the upside. So I'm going to wait for a pullback down into this pocket here, this 15-minute and pre-market high pocket with stops worst case below 740. So I have my stops defined, and I'm going to look for a test into here. I don't have the perfect area, but I'll add as we get in this area because I don't have to have the perfect to the point entry. I'll try to ride this up. Okay, so we get that add in here. We get the test in here. I would, if I was truly back testing and trading, I'd add my position the same size I'd use with real money here, and I'd ride this up and have the same exact processes as I do with real money here. Now, do I recommend paper trading? No, I really don't. And I will tell you why. It's because whenever you're trying to strictly gain confidence with paper trading, why? Let me ask you this. Let me counter your question with a question. How many of you guys have done very well paper trading for like a month or 2 months or something, and then ended up trying real money and absolutely annihilating yourself? Anyone here? Andre, Mitch, Christopher, Evan, Carlos. Lots of you guys, because it's very common, right? It's very easy to become a superstar on a paper account. It's very easy to become extremely confident trading paper, but when you go into real money and you put real capital on the risk and you don't have the accountability and you don't have the discipline, and you don't have the focus to consistently execute on a day-to-day basis, that's when things get really tough. It's really hard to execute that with real money and real emotions on the line versus paper trading where you have no skin in the game. There's nothing. You feel me? So that's why I don't recommend paper trading for anybody here who wants to gain real confidence. I'd rather have you trading one contract or one freaking share or one micro and getting skin in the game and having real emotions tied to your trading versus paper trading that has no impact on anything in your normal life. It has no sort of impact on the hard-earned money that you've worked so hard for. You feel me? The only thing paper trading is good for is learning how to use your tools. That is it. That is the only thing paper trading, in my professional opinion, is good for, is learning how to use your tools. Besides that, nothing. So help reading volume. All right. Here's your beginner's guide to volume. Is that whenever you have a confirming trend candle, right, you want to use volume to dictate whether buying or selling pressure is aggressive or not. All right. So on this particular example, we see strong wick to the upside, strong body close, and high volume candle. So what does this candle right here and this volume node tell me? What do the two correlate? Tell me in chat. What does this volume candle mean about this price candle? is finna rip. It means that buyers are aggressive. It means that our buyers are very strong because they're supported by volume. It's very aggressive buying, right? Versus if this candle would have had volume down here, it would have said, hey, even though we're moving up in a lower volume, there's less probability we get the aggressive move to the upside. It means buyers are in control. And you guys want to be on the side of the trend to move. You guys want to be on the side that's in control. If it's selling pressure, which I love trading the downside. I mean, I trade the upside like here. We made good money on this. They made like $2,000 or $3,000 or something this day on my live account and plus money on the fundeds. But I love taking the elevator down. Doesn't matter though. Either way I'm trading, I'm looking for the trend move. I'm looking for where price is heading. I'm not using, and why this works best, right? Let me tell you why the best part about all this, okay, is that when you trade VPA and when you trade volume price and when you trade how I've taught you to trade tonight and gave you all the tools to use, it takes the guessing out. It takes the emotion out. You want to do something? I don't care if you want to do something. I care about what your system says. You feel some way? I don't care how you feel. I want you to manage your risk and trade what the chart's showing you. That's what I care about long term. That's what I want you to focus on long term. That's what truly matters for you. And that's what's going to keep you profitable and get you your first payout in 2026. That's what's going to scale your live account and make you consistent money in 2026. Volume is the tool that helps you do that. Do I do limit orders or market? Primarily market orders. I don't use enough size to need to limit. I'll use limit orders for stops and for like partials. And actually, I lied. For take profits, I'll use limits. For stops, I usually use market stops. Jadon, what is your pros and cons between prop and live and what you recommend for an intermediate trader? Well, it depends. I give you guys a straight up answer, right? I genuinely, from the bottom of my heart, hopefully you can see this. I want to see you guys achieve your goals and do well with trading. Yes, I have code JDON with Tradeify and Apex and Funded Next and Alpha Futures. But what do I tell you guys every single day whenever you guys go buy a prop account? What do I tell you guys? That you probably don't hear from anyone else, genuinely. What do I tell you guys for those who rock with me often? Do I tell you to go buy 1 million accounts? Do I tell you that prop firms are the end all be all? Do I tell you I want you on prop firms forever? I tell you guys, I want you to use these prop firms as a tool. I don't want you churning and burning accounts using code JDON. I want you guys getting valuable experience with some skin in the game. I want you becoming a liability for these prop firms using DOD in the VPA system. I want you guys getting your payouts and moving those payouts to a live account and then eventually getting the hell off of prop firms. They're a tool. They're not the end all be all. And that's the truth. That's what affiliates don't tell you because they want you to take 5, 10, 15 trades a day and use their code and blow up all your money so they can collect. That's what they want you to do. That's why they give you all these complicated strategies and tell you to go buy 1 million accounts and rattle off trades left and right in their lives. It's unethical. It sucks. They can be a great tool. Absolutely. They can be a tool that makes you put your own money in the game, but also limits your losses to what you put in, not a live account with thousands of dollars when you're learning. That's what you have to understand, is they are not the end all be all. They are a tool. That's all they are. They can be utilized great, but they shouldn't be your end all be all. Oh, my throat's starting to hurt, guys. We've been grinding for almost 2.5 hours. Ugh. I've been grinding for almost 2.5 hours, guys. I genuinely hope. I want to take while we still have some people here, I want to take a quick poll. If you guys got value from this tonight, can you just give me a yes in the chat? If you guys got value from this tonight, give me a yes in the chat. There's a lot of yeses. I'd love to see that. If you felt like you got 2.5 hours worth of value and it was time well spent, man, this makes me so happy. So many yeses. There's still a majority of you guys here too, which is crazy, which is absolutely crazy. Told you guys, come to a JDON webinar. You're leaving with value. I genuinely hope you guys all reach your 2026 goals. You guys all crush it with your trading. You guys follow DOD. You trade smart. You trade safe. And as a reminder, guys, if you want lifetime access to these recordings, if you want to keep these recordings as a free, I don't even know if we have any spots left. You guys can check at joinjdone.com. If you even just want to show up and ask questions about your trading, see if Team Bull is a fit for you. Any of the programs for accountability we have. Doesn't have to be my master mentor program. Just book your call, sign up, and you'll get lifetime access to the recordings too. So you can go to www.joinjdone.com. If you want me to be your mentor for 2026, if you think I can add value to your life, which I truly believe I can, book your call and see if Team Bull is a fit for you. Even our daily live trading community has a lot of value that, we'll see if you're a fit. If you are, great. We'd love to have you in. If not, no harm, no foul, baby. You'll get your lifetime access to these recordings, and you got the path to profitability right here. I told you guys I was giving you it. And hopefully you feel and you trust that I delivered. So you were the first person I see you meet and greet and help. I do my best, right? It's pretty cool that we do something that nobody else does. And I like to meet you guys in person. I have for years now, and I'll continue doing that at the headquarters. So woo! It's been almost 2.5 hours, guys. I said I was over to the sickness completely. I think I overestimated myself a little bit. So I'm gonna mob off, get dinner. We will do this again. I appreciate you guys rocking with me. I appreciate you guys being a part of Team Bull, tuning in with me every day. I hope that I delivered value for you guys. You guys got your time's worth. I genuinely want to see you guys win in 2026. As a reminder, if you guys want lifetime access to these recordings, go book your call. Go show up at joinjdone.com. I'd love to have you in my Master Mentor program. I'd love to work with you one-on-one in our group coaching calls, and I'd love to have you a part of Team Bull. I'll see you guys live tomorrow. I will be live tomorrow, helping you guys choose DOD. I hope I see you guys in there. JoinJDung.com. God bless you guys. Thank you all for being here, and I'll see you guys in the next one. Peace, everybody. Have a great night. God bless. Peace. Adios.